Ladies and gentlemen, good day and welcome to the Q1 FY25 earnings conference call of ideaForge Technology Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Parth Patel from Orient Capital. Thank you, and over to you, sir.
Thank you, Siddhant. On behalf of Orient Capital, I welcome you all to ideaForge Technology Limited Q1 FY25 earnings con call. From the management side, we have Mr. Ankit Mehta, Chief Executive Officer, and Mr. Vipul Joshi, Chief Financial Officer. I hope everyone had an opportunity to go through our investor deck and the release that we have uploaded on our website and company's website. A short disclaimer I would like to say before we begin the call. This call may contain some of the forward-looking statements which are completely based upon our beliefs, opinions and expectations as of today. These statements are not a guarantee of our future performance and involve unforeseen risks and uncertainties. With this, now I hand over the call to Mr. Ankit Mehta. Over to you, sir.
Thank you, Parth. Good morning, everyone. Thank you for joining us today for our Q1 earnings conference call. I have my colleague Vipul along with our IR advisor on the call with me. As we reflect on this past quarter, I want to provide an overview of our key achievements, initiatives, and strategic advancements and discuss how these elements are setting the stage for our future growth. Firstly, we are thrilled to announce that we have crossed the mark of 500,000 flights cumulatively on our systems in the hands of our end customers. These are actual missions that have been carried out by our customers in some of the most challenging and difficult environments, both operationally and from a terrain standpoint. This not only boosts our confidence in the products we design and manufacture, but also indicates the potential of this technology to revolutionize operations and tasks across sectors. As I mentioned in the previous call, we have successfully attained the AS9001-D certification, which is a prestigious standard for aerospace quality management systems, as well as the ISO 27001-2022 certification for information security management. These certifications not only affirm our dedication to maintaining rigorous quality standards, but also enhance our ability to meet the stringent requirements of our clients and regulatory bodies. They reflect our commitment to ensuring that our products are reliable, safe, and secure, which is crucial to maintaining our competitive edge as we continue to expand our presence in the high-stakes market that the drone industry is. In the last quarter, we witnessed the fructification of many of our development and diversification initiatives. In Q1, we launched the beta version of Flight Cloud, an automated workflows discovery platform centered around civil use cases. Flight Cloud is poised to be a game changer for the UAV industry. It is designed to simplify drone data management, eliminating the complexities of multiple vendors, regulations, and inefficient workflows, while providing customers with access to expert operators through a unified platform. During the beta phase, we are onboarding domain experts for advanced automated workflows and anchor customers, while also gathering invaluable feedback from these early adopters to refine the platform and ensure that it meets the high expectations of our diverse user base. Another key highlight of the quarter is the advancement of our drone as a service business. We have entered into paid POCs with several prominent enterprise customers as well now for their manufacturing facilities and mines. These engagements are not only validating the technical and operational business feasibility of our drone as a service model, but are also providing us with critical insights into the evolving needs of our customers. By offering tailored yet scalable solutions and demonstrating the tangible benefits of our technology, we are able to build a strong foundation for this business model and driving the adoption of this technology across various industries. On the international expansion front, we continued our product market fit activities and received a very positive response from potential customers in the US. We have launched a border security solution during the Border Security Expo there. We have completed our early adopter program with a few customers, and we envisage that the successful completion of these programs is likely to result in confirmed orders from some of the customers there. With these orders, we expect to transition from an entrant phase to a building phase of our expansion in the US. As we have maintained since the beginning, we are a technology company. Technology and product development through innovation remain at the core of ideaForge. Recent grant of 5 new patents underscores that commitment. With this, our total count of granted patents reaches 43, with 29 patents pending for granting. On the product development front, we continued our efforts in enhancing the existing hybrid VTOL and quadcopter platforms to remain ahead in the market. Apart from features and performance enhancements on these platforms, we have also focused on developing payloads to provide better results to end users and software solutions that will help increase the autonomy of our platforms. We are also developing next-gen platforms in the same category and will launch them later this year. On the larger platform development, we are implementing design improvements on the tactical UAV based on ground and flight test results and are on track as per our plan. For the middle mile logistics platform that we were building, we are making progress on the design and will soon come up with an exciting announcement of what we are likely to build. We will keep you posted on the progress of these initiatives. Through our drone innovation platform, we are reimagining the future of this technology. Partnerships with domain experts who are focused on innovation, as we are crucial for faster technology development and go-to-market perspectives. Our recent partnership with Inertial Labs for integration of their LiDAR payload with our UAV platform is a step in that direction. This partnership will open up a new use case for us and will bolster our confidence in the collaborative approach we have taken for building the UAV ecosystem. We also made strategic investments in line with our philosophy to pursue innovation and belief to utilize existing domain expertise for technology and product development. These investments include Galaxy for a joint development of UAV-based fog and foliage penetration synthetic aperture radar payloads. We made another such investment in Tech Eagle, which is working on logistics use case through drones. There will be multiple avenues for collaboration with Tech Eagle, including cross-leveraging technology, use of their on-ground network for our drone as a service business, and utilization of our state-of-the-art manufacturing facilities for their logistics platforms. Along with them leveraging our platforms for complementary use cases in logistics as they build a full logistics chain using drones up to the last mile. Now I look forward to discussing our financial performance for Q1 FY24-25. Our order book as of 30th June stood at approximately 54.2 crores. We are closely working on our L1 pipeline of 300 plus crores, which we highlighted in the previous earnings call as well. We also expect export orders in the near future based on the feedback we received during our demonstrations and customer interactions. We have previously indicated our business cannot be evaluated on a quarter-on-quarter basis. We are a technology innovation company, and hence, while revenues do not grow on a quarter-on-quarter basis, we continue to invest in product development on an ongoing basis. The consolidated revenues for the current quarter stood at 86 crores versus 97.1 crores in Q1 FY24. Gross profit stood at rupees 28.7 crores with a gross profit margin of 33.3%. EBITDA for the quarter was INR 8.5 crores as compared to INR 32 crores in Q1 FY24. Our EBITDA margin for Q1 FY25 was 9.8%. PAT stood at INR 1.2 crores as compared to INR 18.9 crores in Q1 FY24. The PAT margin for the period was 1.4%. There are certain expenses that are fixed in nature. Hence, with the dip in revenues, operating leverage did not play out. We expect with the increase in revenues, the same will be absorbed, leading to better margins in the future. These numbers are as per our expectations, and as we demonstrated in FY24, we are confident of growth in FY25 as well, despite variations in quarterly performance. I would like to reiterate that our business is built around technology and business innovation and should not be looked at just quarter-on-quarter performance basis. A holistic approach would be to take into account the initiatives centered around new development and diversification, which have potential to provide disproportionate results in the future. As we look to the future, our strategy remains centered on innovation, strategic partnerships, and market leadership. We are committed to leveraging our technology advancements, expand our service offerings, and pursue new opportunities to drive values for our stakeholders. Our team is dedicated to executing our plans and continues to achieve meaningful growth in the future. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment for the question queue assembles. The first question is from the line of Dipen Vakil from Phillip Capital. Please go ahead.
Thank you for the opportunity, sir. So my first question is in the line of, sir, while I understand that economies of scale would have impacted your EBITDA margins, but what led to the fall also in gross margin? So because that has also deteriorated quite significantly. And
Thanks, Dipen. Basically, our gross margin in terms of numbers, I had mentioned in our previous calls as well, is largely determined by the opportunities we are billing in that period. Some of these opportunities were close to a year back. So the gross margin, when we won those deals, was in a way broadly locked at that time itself. And therefore, it's not really a reflection of anything which is emergent from any recent activity, but it's a function of some of the large opportunities that we closed competitively in the previous year.
So largely likely because of fixed price contract happened a year back, gross margins have been slightly lower this time.
Yeah. And this was a competitively bid program, and therefore we obviously did the right thing to back the contract and execute it appropriately in the right time period.
So my next question is in the line of, while the L1 pipeline of 300 crores is encouraging, but the your current order book of 52.4 crores is very bleak. So do you expect to execute the entire 52.4 crore in the coming quarter? And by when do you expect this L1 pipeline to be finalized? Because that seems to be very important to maintain execution under current scenario.
Yeah, so, the L1 pipeline conversion, so let's try and understand what the L1 pipeline broadly indicates, right? It indicates opportunities where we are the only vendor under consideration, and particularly in this past quarter as well, we've been able to make some additional bids as well, particularly in the international market, which have bolstered our confidence on, getting outcomes on this L1 pipeline. Closure of this pipeline in that broad sense is expected in the coming, in the present and the coming quarter. We have to, continuously track with the end customers as soon as we can close them. And the moment they are closed, what we are doing is at our end, we are preparing our ability to execute it as soon as possible. Since there is a good visibility on what's been looked at, we are working towards creating a method and mechanism to execute them faster than usual. And that's what we are investing a lot of our time and energy presently in as well.
And on the current order book that you have, so that will be executed by when?
Current order book should get executed within this and the next quarter.
Got it. So, and I completely understand that ideaForge is a completely technological driven company and it focuses highly on the new product development. But sir, it will be really helpful if you can also give us any market size or the opportunity size for your product or some, so which can help us evaluate the company's forecast or maybe the opportunity size that gathers around the product much better, sir. So any thoughts on that?
Yeah, sure. So let's say, for example, if we take the example of the efforts that we are putting with Galaxy, right, for synthetic aperture radar payloads, the opportunity in the short term is revenue opportunity is looking to be close to about 250 odd crores. When I say short term, I mean the next 2 to 3 years. So that's one of the developments that we're doing. So whenever we do a new payload development, typically it opens up a revenue opportunity for us in the short and medium term. And that's what we are looking at when we do these collaborations. When we look at the LiDAR collaboration that we have done with Inertial Labs, typically the LiDAR market globally for UAVs is about $120 odd million, and it is likely to expand to close to $400 million in the next 5 years. And therefore, that's another market where we will look to gain some market share with this collaboration with Inertial Labs. So similarly, when we are looking at our improved products in terms of enhancements that we do on our existing products as well as the new launches that we are doing on the existing categories, each of these categories that we have chosen to be in as product platforms is an opportunity that has a $1 billion market opportunity and revenue potential in the long term. And we continue to build new categories in these and new products in these so that we can continue to learn from what the customer's needs are, evolve based on the customer's needs, understand what is happening in the global environment, in the war scenarios. And these developments will help us continue to go deep into these market opportunities and build a very large business. So these categories are very large categories in terms of what we have chosen to be in. And our penetration in these categories is going to be contingent on us continuously evolving our product to meet the market needs and the changing user expectations and requirements.
Got it, sir. Thank you so much for the detailed explanation. So my last question also, considering it's a new financial year, so any guidance that you'd like to share on revenue or EBITDA margin?
So, we had mentioned this in the previous earnings call as well, that we plan to grow this year as well as an overall annual basis. And at this point in time, in terms of margins, I think we are looking to closely track similar margins as our last year's numbers, but we will continue to update our progress as we proceed along through the year.
Got it, sir. I have a few more questions, but I'll get back to the queue. Thank you.
Thank you. Ladies and gentlemen, before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Yeah, am I audible?
Yes, Deepak.
Yeah, hi. A very good morning, and thank you very much for this opportunity. So I just wanted to understand what was our R&D spend for this quarter?
Deepak, thanks for the question. So roughly the addition in R&D is roughly about 16.5 crores. And now no new product launches happened, so nothing has been capitalized for the quarter.
So this entire 16.5 has been capitalized, right?
So we have product under development, so it is in the intangible assets under development for now.
So anything expensed out of it, or entire 16.5 is capitalized?
No expense out for the quarter.
No expense out for the quarter. Okay, fair enough. Understood. And when we say that we plan to grow this year as well, I mean, what's the range, I mean, we are looking at in terms of growth? I mean, if you see last year we grew by about 60-70%, right? 68-69%. So this year, what may be the range we may be looking at for the growth part?
So I think a lot of that will come from the conversion of the L1 pipeline to revenue, to order book and then revenue.
Correct.
So we will keep updating on that, Deepak, as soon as we have, visibility on many of these aspects.
We'll keep updating. Okay, understood. And the second quarter would be seasonally your weakest quarter, right?
Typically, that was also the case last year as well. So yes, I think that is something which should be expected.
So Deepak, typically because that's our execution phase as well, we get a clarity on our orders and we build our products for the supply, and we expect the customer visits to conclude and all. So typically the Q2 is our building phase and is expected to be the same as well.
Correct. So in light of that, I mean, you mentioned, I think this year we are closely tracking the EBITDA margin similar to what we did last year. But given our first quarter EBITDA margin of 3% and second quarter ideally at a lower revenue scale with fixed costs there, you might have a EBITDA margin in the negative territory. So to maintain that similar kind of margin, your second half margin should be very good. I mean, ideally. So any sort of comment that you want to make on that?
So I think the opportunities that we are tracking do give us adequate confidence on the numbers panning out. But like I said, the moment we have more visibility on some of these on ground, we'll be able to update. It won't be appropriate to do that right now.
Okay, understood. Fair enough. I think that would be it from my side. All the very best to you. Thank you.
Thank you, Deepak.
Thank you. The next question is from the line of Sanjeev Goswami from Fractal Capital Investments LLP. Please go ahead.
Yeah. Hi. Could you sort of give out some context or details on the U.S. Homeland Security work that we have done in terms of the size of the work that they are going to roll out, and is it a very competitive bid, or what sort of outlook can you have there?
So what has happened in the U.S. market for us, just to give a quick update, we've done close to a dozen demonstrations there to end customers. We have close to 5 early adopter programs operational over there. 2 of them have reached their conclusion, and we are awaiting the customer to get the adequate budgets that they need for getting our products in their hands. So that's the broad traction at this point in time. So we will see early revenues from the US geography in this year itself. And we are continuously pitching our product to various end customers. We are participating in events and opportunities there to expand the opportunity base in the US market. Broadly, the feedback as far as the product is concerned is positive, and therefore we are investing in that market with good energy.
Is the bid going to be with a partner, or is that our own bid in the U.S. Homeland tender?
In U.S., we have partnered with close to 3 to 4 value-added resellers, and Homeland Security bids are going to be via these reselling partners. And when I say more bids, what we implied in terms of international market was not just bids that we have placed in the U.S. market. I had indicated last time as well that interestingly, U.S. opportunity and U.S. partners and other visibility has increased our inward and inbound from the African markets as well. And therefore, some of the opportunities that we have bid for are in the African market. So it's not just opportunities that we bid for in the U.S. in terms of Homeland Security customers, but customers in the African markets in both defense and Homeland Security are good opportunities we are tracking. We placed some large bids there as well, where our product is the key product as far as drones are concerned.
Is there a rough sense of size of, not the L1, you already called out the L1, but the size of bids that we would have submitted in the international markets as of date that you would like to call out?
Presently, it's in surplus of the L1 number that we have suggested earlier.
So beyond the L1, there isn't any active bid that we are yet to hear about?
So the L1, the way we have suggested the number, it has a lot of cover opportunities. So it's not merely a number that is based on specific opportunities we bid it for. It has a lot of cover opportunities as well. So therefore, the opportunities where we are the only vendor under consideration for drones is actually a larger number than this. Within that, international itself is a larger opportunity base than the number we indicated. So therefore, the expectation is to close this quite positively.
Thanks. I'll be back in the queue. Thank you.
Sure. Thanks, Deepak.
Thank you. The next question is from the line of Gautam Trivedi from Nepean Capital LLP. Please go ahead.
Yes, hi. The question I had was with respect to your breakup of revenues. Defense is still 70%, and then civil is 30%. How do you see that in the next, say, 3 to 5 years? Are you seeing defense and the governments rather, if it's India or Indian or other governments, becoming lower as a percentage of revenues?
So, what's happened, Gautam, is that, we've just seen some green shoots in drone as a service around enterprise customers. But these are on the drone as a service side, which means that the impact on revenue there is not going to be as much in terms of value at this point in time in the short term. But in the next few years, we should expect the split to be similar to what you are seeing right now in the present quarter. However, I think in the long term, as the opportunities on the services side become larger, use cases around inspection and logistics are the core use cases where pure enterprise users will have the potential of becoming larger than government opportunities. Apart from those two vectors, most other applications where drones can be used end up serving a very large customer, which is the government, because if you were to even look at mapping, the largest landmass in that one sense is with government customers across the world, as well as homeland security, again, is a vector that is related to government. So therefore, when we see a lot of uptake on logistics and inspection opportunities is where private will become large, and we are seeing the early green shoots of that becoming an important vector. Apart from that, users around industrial security is something that we are seeing a lot of green shoots in the short term.
Okay, so that's one. And the second thing is, I guess, the numbers obviously did surprise most of us on this call. And as you said, this is a seasonal thing. Is there a huge impact on raw material costs also that ended up depressing your numbers year on year?
No, I don't think there was any material impact on raw material costs. They were as they were. Like I said, these are bids that we won competitively. These were large bids, and we are executing those bids based on the customer timelines, and we're making the expected deliveries on those.
I see. No, thank you so much.
Thank you.
Thank you. Participants who wish to ask questions may please press star and 1 at this time. The next question is from the line of Amitosh Kumar from Master Trust. Please go ahead.
Hello, sir. Could you please comment on the demand for high technology drones in logistics as well as the geopolitical scenario, that is surveillance and warfare? And how do you see the demand in coming quarters in the industry?
So from a demand standpoint, I think there is a impending induction of this technology at a much wider scale amongst our forces. That induction of technology is something which we don't see any signs of pausing. I think the ordering cycles and the ordering avenues for them remain to be vectors that they also are very closely tracking along with us. And therefore, I think mostly we don't see a challenge in terms of the intent or the opportunity. We do continuously track their ability to be able to aggressively go in that direction. And that's where I think most of the effort is at this point in time.
Okay, sir. Thank you.
Thank you.
Thank you. Next question is from the line of Sahil Sharma from FM Construction Agency. Please go ahead.
Hi, sir. I was going through your annual report, and there is a mention of middle mile logistics and e-commerce use cases. Can you please clarify if this middle mile logistics the product will be co-designed with your new partner that you mentioned about Tech Eagle drones, or is the plan for you to build out a product completely independently?
So the reason why we partnered with Tech Eagle is twofold, right? One is that we will definitely learn a lot more about the operational needs of logistics customers, because they are not only building a specific drone platform for logistics, they are also building the drone logistics service layer. And therefore, our objective is to learn firsthand what does it take to build a logistics opportunity, and what are the needs of the customers, and what are the constraints on the ground that are critical for us to account for in our design and our operational design when we look at middle mile logistics. So that partnership, in that one sense, is going to feed into our developmental efforts. However, the efforts at this point in time are entirely being made by our own teams, and we are designing that platform from ground up.
And there's also this mention of, I think it's a logistics use case drone where you said 500 kgs, 100 kilometers range in your report again. Any idea of what the timeline is looking like to launch this product in the market?
So the all-up weight was mentioned as 500 kilos. The platform capacity to carry load will be close to about 100 kilos in terms of additional payload that it can carry, as well as the range of operation is expected to be close to about 100 plus kilometers. And in terms of developmental timeline, we will see us building prototypes starting this year, but the development completion will take between 2 to 3 years as far as this platform size is concerned. It's a much larger platform than what we've built previously, and I think it is something that will take time. However, many prototypes will be built in the process and the path to get there, and I think those will be leveraged across various opportunity creation vectors that we will need for business development there.
Sure, sir. And my final question is, any plans of last mile logistics, either independently, or are you planning to acquire another drone delivery company like a Tech Eagle, or I think there is Sky Air and other companies, right? Are you planning to do it independently or acquire another company for your foray into last mile logistics?
I think last mile logistics is an area that we continue to keep a very close eye on. We are looking to partner with service providers who can leverage our existing platforms that have small but useful payload carrying capacity. So we will partner with last mile service providing operators and pitch our products for that use case as well, as in when we do the necessary software work for those opportunities. But the plan to directly invest or to participate in that opportunity as an operator is something that we do not have at this point in time.
Thank you, sir. Thank you for your responses.
Thank you.
Thank you. The next question is from the line of Piyush Goyal, who's an individual investor. Please go ahead.
Hello, I am audible?
Yes.
So I think apart from the results, which are obviously a bit disappointing, but I see that you are saying that we should not be treating this company as a quarter-over-quarter company. So I take that point. But I am looking at the quarterly numbers as well. So it's not only the numbers, in terms of quality of numbers is also quite deteriorating. After so much of expansion and R&D, your employee cost continuously going down. Your other expenses continues to go up, and the cost of material has seen huge jump. So what is all leading it up to? How come a growing company has less amount of employee benefit expenses? Are you losing employees? Are you losing talent? What's happening?
No, actually.
Hi, Piyush, Rutul here. So basically, if you look at your comparison the last quarter number, there are certain provisions that were also impacting the last quarter. And having now adjusted those provisions, these are the actual payouts for the employee expenses. Plus, these also have the non-cash provisions of the ESOPs that is also there in this quarter which we continue to basically provide for every quarter.
So we don't have any employee or attrition challenges at this point in time. So that way, I don't think that number is reflective of that. It's mainly based on the provisions and numbers that come up as a part of the last quarter, that came up as the part of last quarter. Secondly, cost of material went up, like I explained earlier. This is because of merely the opportunity that we had bagged, that we executed, and the gross margin was lower on that opportunity given the competitive nature of the bids that we had done, and therefore it is the increase in the cost of material is mainly reflective of the gross margin of that opportunity, and that's what we are seeing over here. So on both these cases, it is not anything of a surprise in that one sense, and it continues to remain quite stable as far as the business is concerned.
And also, if I look at the order book, so it has drilled down from 200 crore plus to now almost like 50 crore, which is like 1/4. So what's happening? Is it becoming that orders have dried up, or there is more competition in the market? Other people are catching up. So are you losing ground in terms of competition? Why such a drastic drop in order book in such a sunrise industry, where you claim to be the number one producer or in the country, but still you continue to lose orders?
So you see, basically, if you look at the opportunity and the way the opportunities are built and scaled as far as this industry is concerned, the ordering cycles are dependent on basically how the government looks at large opportunities and their ordering cycles. So therefore, we do not have any evidence of losing ground insofar as the market opportunity is concerned in favor of ideaForge. And we also do not see any evidence of losing competitiveness as far as the market is concerned. It's only a factor of how large opportunities close. The run rate business continues to be there. The base of the run rate business is lower as compared to the chunky large opportunities, and as soon as we close a chunky large opportunity, the order book will again balloon up disproportionately. So I think it's a vector of how much a large opportunity impacts our order book overall. And therefore, the moment we close some of these chunky opportunities, we will see that filling up quite quickly. So it's just a function of time and the ordering cycles for our end customers, rather than being a vector of anything particular on ground that's causing us losing our competitiveness or advantages.
And my last question is, or like two questions is, what is other income of 6 crore? If we didn't have this 6 crore other income, we would have been in losses. So what is the 6 crore other income is?
So, Piyush, Vipul here. Basically, these are mixed in terms of our interest incomes on FDs and also our other investments that have matured in this period.
Okay, so if we didn't have these surplus money lying in FD, we would have been in losses because our net profit is less than your other income. And so last question is from my side, the US market.
Sorry,
so,
Mr. Piyush, I request you to join the question queue for any follow-up questions. Next question is from the line of Anil Kadaria from Frontline Capital Services Limited. Please go ahead.
I want to thank you so much for giving opportunity. I want to ask you two questions. The first, you have revenue visibility only for 1 quarter. So is there any very ongoing concern of the company? And the second question is, if you will not get any new order, what will be the revenue visibility for 3rd quarter? If revenue will be zero, how much fixed cost you will incur? Last question is there any clear-cut vision of company in terms of top line and bottom for next 3 years?
So, Anilji, in terms of visibility of revenue, like you have mentioned that we have a order book presently, which we will continue to execute. We do expect orders to come in as well, particularly from our run rate business, and those orders will also add up to this order book. And of course, as soon as we close some of the large opportunities we are tracking, we will have that also filtering in through the year. In terms of our numbers from the standpoint of results, I think broadly the expenses are visible at this. They are visible at this point in time, and they will continue to track in a similar way at this point in time.
Okay.
Yeah.
Thank you. The next question is a follow-up question from the line of Deepen Vakil from Phillip Capital. Please go ahead.
Thank you for the follow-up opportunity. So, I want to understand about your CapEx plan and also that the new products that you're developing around the tactical UAVs and middle-mile logistics. So, where are we manufacturing that, or rather developing them currently?
So the tactical UAV is being developed from our Mumbai Product Development Center, and the middle mile logistics platform is physically going to be developed in our Bangalore Product Development Center.
And production also will continue to happen there?
Production is something that we do believe that it will continue to be centered around Mumbai in the short term. But as we expand into these opportunities, we will take a call based on the demand and the requirements and the cost base in terms of what it will take to where it will be the most ideal to build production facilities for these platforms. So we are evaluating those as we speak. While the development is on, we have an opportunity to take our time to plan those activities.
So, this Bangalore Product Development Center that you mentioned, was it an existing center of yours for a while, or it's a new center that opened up recently?
It is a relatively new center which has been operational since about a year in Bangalore. And there is a new facility we have taken up for prototyping the platform and building it initially over there. And that is another facility that we are operationalizing presently in Bangalore.
Got it. So, lastly, so you mentioned that you're looking at an L1 pipeline of 300 crores, which can come in, say, this quarter or next quarter. So, how fast can we ramp up execution of the new course? So, what is the lead time that is there from contract finalization to you commencing deliveries? And like blended basis, like from.
Yeah, that's the area where we are, aggressively making our plans and closely tracking these opportunities. So we will continue to work in that direction and come back with.
Most of the details emerge once the contract gets finalized, and then the delivery timelines gets also negotiated, discussed with the customers, and we are specific to contracts, whether domestic or international. Since the pipeline also have a distribution between domestic and international, some of the clarities will emerge once we sign the agreement as well. While we are doing our plannings to have the execution in place as and when the orders get signed.
Got it. Thank you so much and all the best.
Thank you, Deepen.
Thank you. The next question is from the line of Mithun Aswad from Kiva Advisors. Please go ahead.
Yeah, hi, sir.
Hi.
Hello.
Yes, ma'am.
Yeah. Hi. I was just looking at your numbers over the last few years. Your margins are significantly higher in FY22, and they have, gone down in 23 and 24. So I just wanted to understand, is that because of, the cost of materials obviously have gone up quite significantly from FY22 to 24. And even this quarter, you've seen deterioration in margins. So I just wanted to understand, you may be L1 in these 300 crores of fresh orders. I just wanted to understand what is the sustainable sort of margins you're seeing in this business as there are more competitors now, or is this going for marketing efforts? What is actually causing this sort of deterioration?
So, Nitin, what happens is that when we bid for opportunities, right, depending on the opportunity, we have different upfront gross margins. So it is not that the cost of material has post facto increased. The cost of material itself is not something that fluctuates as much as the large opportunities themselves have specific margins that we bid for based on our estimation of where the market is, right? So therefore, it is not really a function of increase in costs. It is a function of the large opportunities and the way we bid, where we believe that we can win those opportunities in a competitive manner. And broadly, the reflection in the margins that you see is basically the mix of the opportunities we execute. So therefore, it is not specifically margin reducing. It is just the mix of opportunities that we have delivered in that quarter that changes our margin vector. However, on a blended basis, we continue to expect to track numbers very similar to our previous year's annual result. So that way, on a blended basis, we should be relatively tracking the last year's number is what our current plan is.
Right. So is it safe to say the larger the orders, the lower the margin?
Not necessary. That's where it becomes a little bit tricky, and therefore we tend to sort of look at it a little bit en bloc.
Right. And if you could just kind of give us a little bit of a larger outlook in terms of how large are these opportunities in the U.S. You talk about Homeland Security. Could this take us to a different dimension in terms of size and scale? And are we prepared to even execute those type of large orders if we were to get them?
So execution is actually something that we are very well prepared for. We can already do cumulatively up to maybe 10,000 drones a year or more. So that's not a challenge in terms of execution capacity. In terms of the opportunity in the US, the market estimate that we had while we were preparing to look at the US market opportunity was at least a $200 million public safety market in the US from a opportunity standpoint. So it's a fairly sizable market, and as we establish our presence there, any portion of that market opportunity, any substantial portion that we can grab over the next couple of years is going to be substantial for ideaForge.
Thank you.
Thank you. The next question is from the line of Aditya Trivedi from Nepean Capital. Please go ahead.
Yeah, so is the revenue model for the drone as a service model going to be subscription, transactional, or hybrid? And what would you estimate to be the size of the addressable opportunity for the drone as a service segment?
So the opportunity is going to be hybrid, but mostly the baseline revenue will come from subscription-based model. And as we add more use cases which have, you can say, piecemeal need for flying, those will be the ones that will be on a per flight basis. However, in terms of the opportunity itself, drone as a service opportunity from a service standpoint itself is, from our estimates, several thousand crores of opportunity at full penetration. But market penetration is what will take some more time as far as that opportunity is concerned. In fact, it's at its very early days of getting seeded in the market as an opportunity with our specific flavor to it. And of course, like I said, it's not just looking at drone as a service for urban areas, but also looking at industrial safety, industrial security elements, etc. Some of our efforts are useful there as well.
Got it. And I think, again, something you've answered already, but since the raw material cost has gone from 26% in FY22 as a percentage of revenue, now high 67%, and like you said, it's largely due to the competitive bidding that's taking place. So if you could just shed some, in terms of who are the key competitors who, I guess, compete within the same segments, that being defense, surveillance, and inspection.
So I think the competitors continue to pretty much remain, similar to the people we had indicated in our DRHP as well. So, broadly, that same list would be appropriate to track at this point in time.
Got it. And none of the key commodities that, I guess, are inputs in your manufacturing have seen any kind of price appreciation, or that I just wanted to bifurcate what is the contribution in terms of commodity prices appreciating as opposed to the competitive intensity, the competitive bidding.
Yeah, I would say that commodity price changes would be broadly within engineering error, if I may, as a technology company. So it's mainly the nature of the bids that we make that makes it a little bit different. But prices on the commodity side haven't really impacted us significantly in that process.
And what are some of the key commodities that you'll use in the manufacturing of the drone itself?
So, we obviously buy a lot of electronics. So, of course, during the pandemic and the period that followed up, there was an escalation in the cost of electronic components itself. So that is one element that definitely saw a lot of variation due to the pandemic and the related supply chain challenges. But apart from that, I think broadly commodities, so we don't really buy commodity in that one sense, because we are largely looking at composites, carbon fiber, and some of these advanced composites are what we use for our products. We use certain kinds of foams for our product. We use a lot of, I think, aluminum and magnesium components. So there are a lot of these structural subsystems that we leverage, but those are not used in any meaningful volume to sort of be affected by the commodity pricing as far as those elements are concerned.
Okay, got it. Thank you so much.
Thank you.
Thank you. The next question is from the line of Hemant Patel from Alder Capital. Please go ahead.
Hi, I'm sorry if this question has been asked before, but I just have one question regarding the employee cost. Wanted to understand that what is the proportion of capitalization that you've done in the employee cost in this quarter, and what is typically the accounting policy for amortization of the capitalized expenses of employee cost?
So I think, like Vipul had mentioned earlier in the call, that I think we have accounted for about 16 crores of intangible assets under development as far as product development is concerned. And typically, when the development finishes for a specific project, we presently amortize it over a period of 3 years based on the project that we have finished and released to the market.
So, roughly about 10 crores of employee costs would have got capitalized in this quarter.
Okay. All right. That's it from my end. Thank you. Wish you all the best.
Thank you.
Thank you. The next question is from the line of Arnav Bhattacharjee, who's an individual investor. Please go ahead.
Hi, am I audible?
Yes, Arnav.
Yeah. So, sir, I just wanted to ask 2 questions. The first question is the partnership with Skylert Labs. Here, I mentioned that in the presentation, the PPT has mentioned that some border
management solution.
Border management, yeah. So, border management solution. So, over there, I wanted to know, were we just a drone provider, or do we have any other capability building happening as part of the partnership? And the other question I had was with regard to the Galaxy IP solutions. Like in the recent the presentation that you had shared, like you had sort of talked about the opportunity, in the target company, right? Like, but here you have also mentioned that some like this is Series A funding.
Yeah.
Yeah. So the other two questions. Thank you.
Yeah. So as far as the border management solution is concerned, what will happen is that we are partnering with Skylark Labs to help us provide capabilities around people detection and some of the other specific features that form a small part of the overall product suite that goes to make a border management solution. For example, features such as motion detection, features such as people detection in the night, features such as doing line of interest following or area search operations. Many of these features are native to our platforms that we build ourselves. So as a bouquet of these features, a solution gets built for that specific application that makes it very seamless for the customer to get their result. So any partnership that we do, the value addition to the solution is a mix of the features that we have built in the product and features that we will host from our partners, or our partners will host from us, that will complete the solution for the end customer. So therefore, there is adequate amount of value addition from both the partners as far as that opportunity is concerned. And then in terms of Galaxy is a business where we wanted to ensure that we are able to develop and feed a long-standing need of our customers, where in several previous occasions they have highlighted to us that they need the ability to look and penetrate fog and foggy environments, because a lot of nefarious activities happen under the garb of these bad visual conditions. And of course, as you can guess, it is a similar situation when it comes to foliage. If there is dense foliage, then people get a lot of cover to do a lot of untoward activities under. And therefore, both of these capabilities are something which is what we've invested in, and we hope to build it together with Galaxy and take it to the market as a opportunity that can solve some of their long-standing needs as far as intelligence, surveillance, and reconnaissance missions are concerned.
So just one question. So the Skylark Labs, the AI, whatever they're claiming, so is it possible for them to do like a follow command, something like that? Like once you have detected, like I was going through that website basically. Just wanted to know, is it possible if motion detection is fine, but is it possible to do a follow action?
Yes. So target tracking is a native capability of our platform. So we are able to provide that capability where if you click on a target, the target will get tracked by the drone, both by the drone controlling its camera as well as the drone moving along with the target to make sure that the target remains in the frame and is continuously pursued. So these are autonomous capabilities that are native to our platform, which are our own developments.
Okay. So this has nothing to do with Skylark Labs, basically. This is native to our platform in any ways. Okay. Yeah.
Target tracking is something which is native to our platform.
Yes. All the best for your future performances. Thank you.
Thank you.
Thank you. Ladies and gentlemen, in the interest of time, that was our last question. I would now like to hand the conference over to Mr. Ankit Mehta, Chief Executive Officer, for closing comments.
So thank you everyone for attending the call and your very useful questions as well. I hope we were able to provide you with relevant updates and resolve your queries. We will keep you updated on the progress as we move forward in the year. Wish you all a very fruitful Q2 and FY25. Thank you.
On behalf of ideaForge Technology Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.